Good morning, good evening, good night. It doesn't matter when you're watching this, it just matters that you are watching. Gonna have to go ahead and make a trade review on my phone. We're gonna try to keep this short, sweet, and simple. Say hi. Yeah. So, today's bias. Let's start off with today's bias. Today's bias was very simple to see. I say that because we made one hell of a fucking move up to take out all of this liquidity right here. Cookie Monster price action took out cookies here, here, and here on the 4 hour. Just on the 4 hour. We're starting off on the 4 hour. Starting off nice, strong, and bullish to the top. Taking out all this liquidity to then do what it needs to do. Now, when I seen that this morning, I damn near shit myself while on the toilet because to see an outrageous move like this happen early Monday, New London close, nonetheless, like it was insane, beyond fucking insane. But I told myself we have two options that could happen from here on out. One option is we close above this 4 hour high that's right here to then want to continue to the upside. But I needed confluences from here on out to show me that that was going to happen. The other option was, seeing as we've already went ahead and swept out prior liquidity closer to London close, there was a very high chance that New York Open was just going to use liquidity to the upside from this move on the 1 hour to then want to go further down. Nonetheless, we needed a liquidity sweep to confirm there was going to be a reversal. Now, remember when I told you I needed more confluences to prove that this move to the upside was going to hold? Well, we could see if we just use the model on a higher time frame to determine which way it wants to go, because the model can work anywhere, anytime, any place with any index. We go ahead and just plug in everything the way that it should be plugged in. We could see here that there is a break of structure to the upside on the 4 hour. Cool. Did we sweep out liquidity to the downside prior to? Yes. All that liquidity was swept out right here. Taking out orders here, here, actually here, hold on. Maybe I can put away the drawings. Oh well, it's just gonna have to be, this is why I don't like doing it off my phone. Any woozy woozies, we can see that the liquidity sweep happened here, taking out all this to the downside right here. Nonetheless, also taking out orders here, and then all the way over here, balancing out price action. So pretty much everything that you see, like this was hit, this was hit, this was hit, this was hit, right? No. But before it was hit. All that matters is that prior liquidity to the downside was already used as fuel for the upside. Cool. Liquidity sweep done. Now, do we have a break of structure to confirm that price wants to continue up? We have a high right here. We have this high, this candlestick blowing above this fucking high, creating the break of structure. Awesome sauce. From here on out, we're determining if we're now looking for a fair value gap and or the equilibrium. But before I get into equilibrium, I have to make sure that this is done the right way. This is so weird doing this on my fucking phone. Okay, so equilibrium needs to be done in the same time frame. So we take it from here. We need a buy. So we're looking from sell Swing low, swing high. Perfect. And then from here on out, we then go into a smaller time frame to determine if that equilibrium was respected. Sorry, I'm trying to balance out doing this while balancing baby. Bear with me. Alright, so this line right here is the half is discount price. You can see that price went ahead and touched into it. More than fine, clear as day, and I'm okay with that. If we go into NASDAQ though, I left all my drawings. Sweet. Go into NASDAQ, we could go ahead and see that very same equilibrium respected on a lower time frame. But nonetheless, what we're doing is to show that price wanted to continue to go up. From here on out, we could see that after we respected equilibrium, we then also respected the fair value gap on the 1 hour. What happens with the fair value gap? Why do we use fair value gaps? Fair value gaps are just retracement tools that we use in the market to have a high potential of knowing where price has the likelihood of coming back into. What I mean by that is into or away from. What I mean by that is when we have a fair value gap, what we would like to go ahead and see is price step away from it, right? When that happens, it validates in the market that price is looking to seek out different liquidity to the upside to then want to fill orders to send to the downside. Nonetheless, we can see that price respected fair value gap, stepped away from the fair value gap. From there on out, what am I doing? I'm waiting on a 30-minute time frame to tell me if we have a break of structure to the upside or the downside to show whether or not that shit was going to be respected. Now, in this case, what I really need to go ahead and see is price go ahead and be respected towards the upside. Because remember, my whole bias is up. But we fail to get a break of structure to the upside on a 30-minute. Remember what I told you guys beforehand? If we fail to go ahead and see further confluences to the upside, things might need to go ahead and change. Well, now things are going to go ahead and need to change. Why? Because the confluences to the downside confirmation are not there. We need that confirmation to show that price is going to go on to continue to go further up. What does happen? Well, if we drop down, or actually if we just stay here, you can see we get the break of structure to the downside, indicating that price wanted to go further down. But nonetheless, before that, I'm already plugging in. I'm already seeing that price has the potential to go down because we've already swept out higher time frame highs on many different fucking sessions, prior different sessions. When that happens, price is then going to want to look to rebalance out that very same price action that it made prior to. What I mean by that is this. Price started to go ahead and get respect. Oh, this is where the inverse fair value gap comes into play. I just talked about fair value gaps. Now I'm going to go about inverses. When we have an inverse fair value gap, what we would like to go ahead and see is price come up away from that fair value gap that is made to then come back down to disrespect it. What happens from there on out? It shows that price is then looking to break structure in that general direction that it's going in. It is a confirmation tool that we use to determine that price is looking to go up or down in a trend. We can see the inverse fair value gap gets respected, steps away from its original place, and on top of that, we get a break of structure to the downside, indicating that price wants to go further. Now, I'm already one step ahead of the game. I'm one step ahead of the game. I have equilibrium drawn up on the 5 minute. What I'm looking for is price to come down, touch this level like it did on the 30 minute, or the hourly, I'm sorry. So then give me that break of structure that we never had on the 30 minute towards the upside. And as you can see, we get the break of structure on the 30 minute right after we get into equilibrium range. But that's fine. I'll pay full price for this. I'll pay full price for this, daddy. It was an $80 buy-in. An $80 $80 that I turned into fucking $300. Suck my dick. Any woozy woozies. We broke structure to the downside, and that was my clear sign to go in. ES was not, or ES was the leading index to the downside at one point until we swept higher highs on the hourly. Once we did that on the hourly time frame up here, once we swept it up here, price said, all right, let's start looking for fucking structure to the downside, because that's all we needed at first was a liquidity sweep to the upside or the downside to determine which way it really does want to go from there on out. Got the liquidity sweep on the hourly to the upside. After that, price started to show that it wanted to go ahead and go further down. I entered into the trade after we went ahead and broke structure. Once price showed me that it wanted to break structure, I entered in right away. You can see that this... I also went ahead with market having the potential to go up on me. I also wanted to go ahead and trail my stop loss. Why did I want to trail my stop loss? Because if price had the potential to swing up and, let's say, have a very deep 5-minute retrace, the potential of my stop loss being hit is high, and I'm not okay with those odds. So at the very least, the only thing that I can do from there on out is trail my stop. What that means is every single time I get a break of structure, I either move my position, my stop loss 20%, 25%, 25%, 25% until I am able to then break even and take my money off the table essentially completely to be risk-free from the trade, to then have everything play out. But the reason why I really do trail is because the price has the opportunity to come up. It's not taking out my original position. It's going to take out the position that I have set here for whatever take profit is still on the table. Nonetheless, the reason why it's done is so that way I am taking profit off the table if price wants to swing in the opposite way that it shouldn't go. But you can see that price started to just respect all the confluences of the downside. We had fair value gap right here respected, showing that price wanted to tap in and move away from that original positioning. I don't recommend using a fair value gap in that sense on the 1 minute, but it could be vital. It could be used. The reason why I had it drawn up is because if price had the potential to swing up and invalidate my trade idea at that time, that inverse fair value gap would have been the first and very last step that I would use to tell me break of structure's happening, get the fuck out of the trade. Had it drawn up just in case, but you could see that it never happened and actually respected the fair value gap towards the downside. That is how you go ahead and that's how you go ahead and place a trade. What did I do exactly? I waited for a liquidity sweep on the hourly. I waited for a 5-minute break of structure to the downside. And then after that, I went ahead and used a 5-minute retrace to tell me which way price had the likelihood of going into. After that retrace, I went into the 1 minute. Before the break of structure ever happened, I'm in that motherfucker. Break of structure happens. I know the general direction it wants to go. I'm placing my fucking trade the right way, and I'm setting sales, baby. Setting sales, full profit. Full take profit today, baby. No partials, all take profit. And this was off $80. $80 that I turned into $332. Suck my ass. Anyways, enough of the gloating. If you guys want to go ahead and learn how to do this the right way, if you guys want to go ahead and learn how to use this model in the way that I do, I have a Discord channel that I am willing to teach people my model, but I'm only allowing certain people to be in that Discord. Why? Because there's not going to be a lot of people that actually want to go ahead and take this shit seriously. What I have to offer will and can change your life if you go ahead and put your time into this shit. I'm not fucking playing. I didn't get to understanding this, breaking down this whole trade the way that I did, and it playing out in my favor without understanding what to do and how to do it. I want to teach you guys so that way you guys don't ever have to worry about money ever again in that sense. Actually, you would if you really are bad at managing money, but trading will help you with that. It will force you to get better if you really want to. And I'm fucking proof of that. I'm fucking proof of that. But again, if you guys want to go ahead and learn this, stop by, drop down, type in boot camp into the comments, and I will then send you a link into my Instagram, which then I would go ahead and just privately message you to see if you're a good qualifier. There will be questionnaires that you got to go ahead and answer, and if you meet all the requirements, then let's go ahead and do this. You are now first in line, free to get this. Like, you're now able to get all this knowledge for free. So, love you guys. I appreciate you guys. This is my trade recap. Say bye.